Hey everyone, I'm Lucas Murphy, Realtor here for all things Milwaukee County real estate. Now today I'll be giving you guys a quick breakdown of August 2025 housing market here in Milwaukee County. We'll go over the latest numbers, what they actually mean if you're thinking about buying or selling, and then I'll wrap up with some tips on how to make the most out of today's market. So let's dive right in. Now, Milwaukee County remains one of the strongest housing markets in the United States, but August brought our first signs of moderation. Prices are still up over 11% year over year, which is huge, but sales and new listings are both down. While inventory is creeping up slightly, it finished the month at 1.9 months of supply, well below the 6 months that is considered to be a balanced market. What does that mean? It means we're still in a seller's market. But it's less extreme than it was in the spring, which opens up opportunities for buyers and sellers to be more strategic with how they come to market. Now, our median sales price in August was $306,000, which is an 11.3% increase from last year. For buyers, that means if you're waiting, you're likely paying more later. At this price, a 20% down payment is about $61,000, and for sellers, this represents roughly $31,000 in additional equity compared to last year. Key takeaway from this is that Milwaukee remains affordable relative to national markets, but values are climbing steadily, and that builds confidence in long-term demand. Homes are averaging just 16 days on the market, slightly longer than it was last year, but still very fast. So buyers now have about 2 to 3 weeks to make a decision versus just 1 to 2 weeks earlier this year. For sellers, it means you can't get away with sloppy pricing and poor presentation anymore. Buyers are more selective, and you have to make sure you come to the market with a strong game plan. Still, if your home is priced right and move-in ready, it's going to sell quickly. We saw just 567 closed sales in August, which is down about 6% from last year. That reflects affordability pressures as prices rise faster than incomes. What does that mean? For buyers, it means that there's a smaller pool of competition, less pressure, and more negotiation room. For sellers, it means differentiation is critical. You can't just rely on the demand alone. Your marketing and price setting strategy are going to matter more now than they have in the past. Only 772 new listings came onto the market. That's a 7% decline from last year. Many homeowners are still locked into low interest rates and are hesitant to sell unless they get the price that they absolutely want. For buyers, this means that choices are still limited and you need to act quickly when the right home comes onto the market. For sellers, this limited supply gives you the advantage. With fewer homes to compete with yours, you can have more room for your property to stand out on the market. Sales to list price ratio. The average sale to list price ratio is just a little bit over 100%, which means that homes are still selling slightly above asking price. But the bidding wars we saw in the spring are cooling off. Buyers should budget to pay about 1 to 2% more above asking for those homes that just come onto the market that are well priced. This is not the 5 to 10% premiums that we saw earlier in the year. For sellers, this means testing buyer limits with inflated pricing is risky. Price at market value and you still attract strong offers, potentially multiple offers with better terms. Inventory and supply. The active inventory is sitting at 1,105, which is up 1.3% year over year, with that 1.9 months of supply that we talked about earlier. A balanced market is around 6 months, so we're still deep in that seller's territory. Buyers, you do have a touch more selection compared to spring, but competition is still there, so you have to come accordingly. Sellers, you guys remain in a strong position, but the slight increase in supply signals that balance may be coming down the road. Breaking it down by price range, homes in the $200,000 to $300,000 range saw sales decline 30%. That's affordability being squeezed at the entry level. The $300,000 to $500,000 range is thriving, with sales up 15%, showing the middle market is driving the demand. Above $700,000, luxury market is mixed, with buyers becoming more selective. So if you're buying in the middle market, be prepared for more competition. If you're selling at a higher end property, make sure you're strategic with your pricing, and your marketing is going to be the key to moving that property. For buyers, your insights are the following. You finally have a little bit more breathing room, and now you have about 2 to 3 weeks to make the decision instead of just days. But if there's a property that comes onto the market that is seeing a lot of competition, a lot of people coming through the doors the first few days, you'll still have to act accordingly. So you need to be prepared, get pre-approved. Current mortgage rates are around 6.3%, and plan to budget just about 1 to 2% over asking price for those markets that make sense, working with your realtor to determine your offer price. And don't forget to consider areas like West Dallas, Cudahy, or South Milwaukee for more inventory options if you're flexible in your search criteria. For sellers, leverage remains strong. You want to price competitively. Slightly below market can spark bidding wars if done correctly. and you want to prep your home thoroughly. Staging, repairs, and presentation for key items is going to matter. Highlight any unique features you might have, whether that's updated kitchens, outdoor space, or location benefits, and expect your home to sell within about 16 days if it's priced and presented properly. Mortgage rates. Like I said, they're sitting at their lowest they have in the last 11 months, right around that 6.3% for the 30-year conventional. For buyers, that means improved affordability. On a $306,000 home, you're looking at about $1,520 a month for the principal and interest alone. For sellers, lower interest rates means more buyers are coming back into the market, but many sellers, you guys are still locked into those old 3% mortgage rates that we're just not seeing in today's market, which is part of why the supply is still tight and there's limited inventory available for those new buyers looking. Nationally, housing markets are cooling with 27% of markets now favoring buyers, but Milwaukee continues to outperform. Headlines like Milwaukee housing soars, mortgage rates drop to 11 months low, keeping our market in the spotlight. Outside attention also is fueling investors' interest and keeps confidence strong in our local housing economy. So the bottom line, Milwaukee County's housing market is still strong, but it's shifting. Buyers are getting a little more time and leverage, but sellers still hold most of the power here. Whether you're buying or selling, the strategy you use now is going to matter more than ever. And if you want to position yourself to win in this market, let's build a game plan together specific to your goals and your needs. My contact information is here on the screen. Reach out today and let's get started.